Deal news in the tech space. Hewlett Packard Enterprise announcing it has agreed to acquire Juniper Networks for around $14 billion. HPE shares fell on the reported news yesterday, while Juniper shares up double digits. Here to break down the move is HPE CEO Antonio Neri. Joins us first on CNBC. Antonio, great to have you on Deal Day. Thanks for joining us.
Thank you, Sarah. Good morning.
It's been exciting for a lot of investors to see deal-making activity come back in 2024. How did this one come together? How long?
Well, Sarah, thank you for having me on the show. I will say this is a continuum of our strategy to supercharge the edge-to-cloud momentum we have. And honestly, this is a transaction that will deliver significant value to our shareholders, but will make HPE, Hewlett Packard Enterprise, more relevant to our customers and partners, and allows us to capture the market inflection points we see, particularly with AI. So this combination will double the networking business size of HPE. It will represent 31% of the company revenues, which is equal to compute, but most important, it will represent 56% of the company profit. Together with Juniper Networks, we have all the capabilities to deliver an amazing networking fabric to capture the mega trends we talk about, particularly with the AI.
So you would characterize this as growth-driven? Because I think there were some questions from analysts of what the play is here. Is it diversification? Is it scale? Is it growth?
It is all the above, because first, obviously, it gives us scale. We have built an amazing business with HPE Aruba Networking, but that was in the campus and branch. Now with the proposed acquisition of Juniper Network, we are expanding in the rest of the total addressable market in the networking space. Second, from a deal perspective, this is accretive from a non-GAAP earnings per share and free cash flow post-year one close immediately. And then after that, there is significant growth ahead of us because we are addressing all aspects of the networking stack, as we call it.
Your stock is flat this morning, but it took a big hit yesterday, and I'm curious what kind of conversations you're having with investors about that. Obviously, it's a big lift, and you're taking on debt to do this deal, but are you having trouble explaining the strategic value to investors? What kind of concerns are you hearing?
Now, obviously, investors are digesting the news and understand, obviously, it's a large transaction. It's $13.6 billion. It's the largest transaction Hewlett Packard Enterprise has done in the history of the company. But is understood. The thesis is understood. We are creating a new company, Sarah, where the core foundation is the networking business. And that networking business has growth trends all in favor. And ultimately, with AI, you need more connectivity than ever before. Then obviously they want to understand all the math associated with this. But remember, the value of this deal from a synergy perspective is higher than the value of the cost of debt that we're taking. And we are committed to maintain our investment credit rating, which is core to us. We will continue to do share buybacks and pay dividends. And then on top of that, we will continue to see growth as this transaction closes. So when you think about long-term opportunity here, they all will understand it, but it takes time for them to understand the ins and outs. And that's my job with the Rami Rahim, the CEO of Juniper, that's here with me today. We're having multiple calls with investors, employees, and customers and partners.
Again, to Sarah's point, you're going to need to have those calls given the stock did decline markedly yesterday. You mentioned market inflection points. You said that earlier. So again, I'll give you a chance to explain to those investors. What does that mean?
Yeah. So Dave, so first of all, obviously, everybody's talking about AI today. And HPE is uniquely positioned in the AI space because we are the market leader in supercomputing. We have an AI native solution for these large language models and the other foundational models now that are being deployed. But then when you think about the cloud native world, the ability with Juniper Networks is to bridge the two worlds together. And that's a massive opportunity because the connectivity is the foundation to that. So AI is a major inflection point. Then think about the ongoing digital transformation of every enterprise. And the first step to digitize and automate and digitize your enterprise is the connectivity. And that's where Aruba plays a massive role there as well. But ultimately, customers need one integrated solution. And together with our compute and storage business, we can address all aspects of what customers need into one integrated experience, which will be delivered through our growing platform called HPE GreenLake. which today has 29,000 customers. We manage more than 4 million devices, and ultimately, we can create even more value for our shareholders through software and services.
Yeah. Antonio, always a question of timing here in terms of when you close, and that gets to antitrust. Not that there's a great concern here for it, but do you guys need, or are you going to even try to get China approval? I know you've sold your JV there. It's not clear to me, do you have any real business? So is China and SAMR something you still have to get approval for?
Well, it depends, Dave. So first of all, we are in the process of selling the joint venture, and we are on track to complete that in the first half of 2024. So that's happening. From a regulatory approval, we don't believe it's an issue. There is a chance that we don't need to file for a regulatory approval in China because of the thresholds, since Juniper doesn't have a very large business there, and all our business is being done through the JV, which obviously H3C is a local entity. So that's a plus, which we believe give us a clear path to close the transaction by the end of this calendar year or beginning of calendar 2025.
But I do wonder if there's going to be any antitrust scrutiny, for instance, on the fact, Antonio, that Juniper's 10K mentions HPE as one of its principal competitors in the network infrastructure business. A lot of people think there's going to be overlap between the Aruba and the Mist assets.
So,
any
Sarah,
concerns on that front?
I don't, but obviously we have to work through the process, and we're going to collaborate with the regulators on that. Let me tell you that the combination of HPE and Juniper is still significantly smaller than the other ones, particularly the large incumbent. So we don't believe that's a challenge. In many ways, actually a good thing, because obviously it gives customers choice and flexibility. And so from that standpoint, I don't see an issue. From an overlap perspective, we don't see, Rami and I see it exactly the same way. We don't believe there's an overlap here because, remember, Juniper Networks, to the AI-driven Mist approach, they have addressed different verticals with different type of use cases and architectures, where Aruba has addressed other verticals with a different type of use cases. So the combination of the two gives us the best of both worlds by integrating the AI-driven approach that Mist has established in the market for the last few years with the scale that HPE Aruba has built.